All right, welcome back to Not Financial Advice. Today we're going to be taking a look at Foot Locker and its $30 shares to get an idea of how much this company is worth on a per share basis. Before we can get started, I'll ask you to like the video and subscribe to the channel so we can jump right into it. All right, so taking a look at this chart here, it's actually a bit more than this, but the company's down over 60% from all-time highs, and it certainly had a rough couple years as well as a few rough quarters, um, with the exception of a few days ago. And this is the position where I decided to enter the stock. So we can sort of see that trend line there that's established. You know, just based simply on this, we might have reasons to believe that Foot Locker's $39 stock is undervalued. So let's get started over here on Qualtrum and take a look at different metrics that matter to see if we can get an understanding of what's going on with this company. Um, so looking at its market capitalization, a, a $2 billion stock. This is a $3 billion stock. This is going to be a pretty small mid cap, if I'm not completely confused. And looking at its forward PE ratio, it's trading very cheaply at just over 13. Um, some other things, they recently suspended their dividend in response to some really rough quarters after several rough years. So previously, this thing was yielding nearly 10%, and the payout ratio was too high. So when they went ahead and suspended their dividend, that definitely didn't hurt the price. Didn't help the price of the stock rather over those next few days. So that's something to be aware of. The company's not currently paying a dividend, but let's get right into it and take a look at the revenue growth on Foot Locker. So, this is certainly a company that did more revenue in 1993 than 30 years later. But this is potentially a turnaround play in action. Um, and we're going to be speaking about this a little bit more in a second, but they have a great CEO who's doing a lot of good things. So, just looking at the more recent past, the company's been increasing revenue ever since 1999. And in the last 10 years, they're up 3.55%. So that 3.55%, we're going to be utilizing that growth rate when we do our rough DCF estimate to get an idea of the fair value of shares at the end of this video. I'll ask you to like the video and subscribe to the channel, and we'll keep it moving. But as far as revenue goes, this is a check mark. Free cash flow. So looking over the last, over the last 20 years, we can see that the overall trend for this company's cash flow is up and to the right. Although the quarters reported, which include 2023, um, the company is free cash flow negative for this year. I expect that that'll turn around. And because the overall trend and the magnitude of their free cash flow is up and to the right, I will be giving this a check mark. So moving right along, let's take a look at their dividend. So definitely not a company that can be trusted for their dividend. They've cut it multiple times in the past, and that's just going to make this a big red X. Even though they're not even paying one, I'm going to ding them for that regardless because they deserve it. Um, let's look at some other things that matter. So let's look at the historical PE of this stock. And so historically, it's traded. We're seeing numbers in that low 13. Historically, it's traded right around a 14 PE. So this will be a check mark on historical PE, relative PE valuation. Let's take a look at ratios. I'll ask you to like the video, subscribe to the channel as we are blowing right through this. And I can see a pretty steady line that's held in that mid-teens. Historically, they've been able to return capital around that mid-teens level. It's been sort of up and down these last couple years. Over the last 5 years, it looks like they're sort of in that mid-teens level. So this is pretty okay. It's going to be a green check mark. Um, yeah, not much more to say on that. Let's take a look at the profit margin on the company. That's actually a little bit better than I thought. So a profit margin of around 7%. That's going to be an extra check mark for them. So let's take a look at their expenses. Their expenses are, for the most part, going up and to the right, which is negative in this case. So that's going to be a red X mark on this company. And lastly, for this portion of Qualtrum, I've said it so many times, a software service that I pay for, not one I'm affiliated with. So I'll leave a link to Qualtrum in the description below. But looking at the shares of Foot Locker, this is a big green check mark. They've been reducing their share count by 4.7% a year on average over the last 10 years. So this is a company that has a track record of buying back shares, which means shares bought today very likely will represent ownership in a larger piece of the pie moving forward. So big check mark here. I'm going to show you something that's pretty neat on this company, and I'll ask you to like the video and subscribe to the channel as I'm doing that. Um, but what we have to notice here is that we have insiders buying this stock, and this will be as good of a time as any to talk about that. I sort of mentioned her earlier, but Foot Locker's new CEO is Mary Dillon. Mary Dillon previously was the CEO of Ulta Beauty. Ulta Beauty is another company I'll be doing a video on here this weekend, but it's a company that is a fantastic retail company. It's a company that I'm pretty dang confident has beat the S&P 500 by significant numbers over recent times. And so Mary Dillon's a fantastic CEO. So to see her take over here at Foot Locker, and then to see her buying at making buys at $40, anywhere from $40 to $26 to $18. Mary Dillon has recently purchased, it's going to be in the last few quarters. Mary Dillon has recently purchased $800,000 of Foot Locker stock. And the only reason that an insider buys stock in a company is because they believe the price is going to go up. So this right here is a massive check mark. It looks like her average price is going to be somewhere right around this 26 $27 mark. So her cost basis on these shares, at least on the public side, is similar to where the shares are today, and she's purchased $800,000 in the last few quarters. So that's, again, a massive green flag. So we're going to come over here. We'll take a look at this. I own some Foot Locker. Looks like I own 415 bucks worth of it. I'm up 16%. This is just in the last few weeks. It's $60 profit just in the last few weeks. I saw how much it had dropped, and based on everything that I could see, as well as the facts and the figures and Mary Dillon buying, I decided to buy a small amount. And so I'm up 16% on the stock just in the last few weeks. But I think that this chart is a lot. And so I want to take another second and look at this chart with you. So after over the last trading week, the stock is up 34%. Okay. That's pretty nuts. If we look year to date, I took notice of the stock when it dropped right here. And so, folks, when a stock opens 27% lower, that's called a gap down. And so I started making purchases there. And then we had another gap down here, another 28%. So we had two 30% gap downs, and I started buying somewhere around here, and then I purchase again somewhere around here as well. But historically, what happens is those gaps are going to fill. And so that's the year to date looks ugly, down 20%. Last year looks horrible, down 26%. They're down even over the last 5 years, right? 44% over the last 5 years. But looking at this again as we did, it's somewhere in that mid 60s range that the stock is actually down from all time highs. And so if we just look at, if we look right here where this thing bottomed out, maybe Wall Street heard that Mary Dillon bought $800,000 of its shares. But folks, when you have a value company, a lowly valued PE company, something that's value or deep value, when it gets beyond a certain point and there's so much pessimism in the stock, it's just remarkable that in a couple months the stock ran 80%, right? Um, just crazy, crazy, crazy stuff. So I still think there's some opportunity here on this $30 stock. Like I said, I own four or $500 of it. And so before we go into our DCF and take a look at what I think the value of this $30 stock is, let's take a quick stop in here and look at Foot Locker's recent press release for its third quarter. So um, one thing that we have to keep in mind when we talk about, how's the revenue doing, this and that, um, you know, when we look at 2022, part of that probably would include quarters from the end of 2021. And so this is when, the government was pushing money into the market and lower income people had money still through, um, stimulus checks and things of that nature. And so they have some tough years to compare themselves to. So we don't always love to hear that comparable store sales or total sales are down 8%. Obviously, that's not good. But this is a company that when the consumer was flush with cash and not doing anything, they've performed really well. This company rather in revenue over the last few years. So that's to an extent to be expected. But they had a really good earnings report, and this is part of what's brought this stock up 35% in just the last few days. They had a really good earnings report. So let's actually take a second and see what they're showing us here. So reported on the 29th, November 29th. So I think that was on Wednesday. So yeah, they beat on earnings per share by 44%, and they beat on revenue by 1.5%. So that 44% beat on profitability on earnings per share, they beat 44%. And since that time, beating 44% on earnings per share, the stock has moved in a similar fashion here. Under that, but a substantial amount in the last 5 days. So, okay, we're going to wrap it out here. I'll ask you to like the video and subscribe to the channel. And let's just get sort of some of the high level overviews. I think all of you know what Foot Locker is. You've shopped there, you've been there. They have physical stores. They're working to move their stores out of malls and into higher traffic areas, which is smart. They have a new initiative called Lace Up, which I'm sure includes a loyalty system, loyalty points, things of that nature, a great CEO. So, shifting towards online, doing a lot of other good things you have to see in retail in 2023. But they narrowed their 2023 guidance. So they sort of made it wide, and now they're having better results. So they've narrowed it, which is, forward guidance that's an improvement. And so they also just entered into a multi-year partnership with the NBA, which is awesome. And then they are moving into India, which is one of the few areas of the world with some really significant population growth here. So let's just breeze through this real quick. Mary Dillon, CEO, said delivered third quarter results ahead of expectations, strong execution, early progress against our lace up plan, improved conversion trends across channels, blah, blah, blah. We're updating our outlook to reflect the momentum in which our strategic initiatives into the have blah, blah, blah into the fourth quarter, including strong results over the Thanksgiving week period. So that's good. Um, blah, blah, blah. Narrowing our 2023 outlook and still expect to end the year with inventory levels flat to down slightly. So you don't want to have excess inventory, so that would be considered good. Miss Dillon continued, they've partnered with NBA as an official league marketing partner. NBA official league marketing partner in the US. Combined with the recent rollout of our home court experience, we believe this will drive deeper engagement with our customers and cement Foot Locker's leadership at the center of basketball and sneaker culture. I do think that Foot Locker has some uh, brand value. Everyone knows the referee outfits that their staff members wear. Moms want to take their kids in and press down on the front of the shoe to make sure that they're buying the right size. I think that I think that people will buy sneakers in stores over the next 20 years. And so retail is a pretty unloved sector, but it's one that I know about because I'm just a regular guy. So I am in at this point. Um, this talks a little bit more about their partnership with the NBA. That's great. And then announcing entry into India. Really good. And then lastly, last thing we're going to look at. So they have 2,600 stores in 26 countries. So international diversification. That's going to be the US and Canada, Europe, Asia, Australia, New Zealand. In addition, 190 franchise stores in the Middle East and Asia. And then also going into India some more. So internationally diversified, $30 stock, has just ran 34% in the last 5 days. $29 or $30 stock. Let's get a look over here at the fair value estimate on Foot Locker stock. So this is data that I took for the most part from Qualtrim. There was one thing that looked off to me, so I went to the Wall Street Journal to figure out their total debt. But just looking at an average of free cash flow over the last 5 years, that average is $438 million of free cash flow on an annual basis, sitting on about $536 million of cash as of the time I recorded this data from Qualtrim. Debt, long-term debt, 2.7 million. Shares outstanding, 95.5 million. Now, remember when we saw that 3.55% annual growth rate over the last 10 years? That's what I'm basing these projections on. So I'm looking at a growth rate over the next 5 years of 3.25%, being conservative, down to 2.75% years 6 through 10, and a terminal growth rate of 2%. $30 stock, 10% discount rate or required rate of return. $30 stock for Foot Locker, fair value estimate $41. So I think this company is 25% undervalued. That's why I'm buying it. There'll be many catalysts in the future. I believe they will reinstate their dividend. So I own it. I like it. I hope you enjoyed this video. If you did, hit the thumbs up button and subscribe on your way out, and I will see you on the next one.